So this is your lecturer Mohsin Azam Khan here, and today's lecture is about fiscal policy. So last time we discussed about monetary policy, but in today's lecture we will be discussing about fiscal policy. And because of the fact that it has lots of discussion in it, that's why I've opened up my video as well, right? So remember the name fiscal policy. You always hear this term called fiscal policy. The government is applying different types of fiscal policy. So they are applying this type of fiscal policy. You might have heard the word regarding expansionary policy. You might have listened the word contractionary policy. So all that practicalities and all those policy, we will be studying that in today's lecture, and I hope so. You get a practical idea what fiscal policy do, what are its impacts, how it can make a change in an economy, and how does the government makes use of it, right? So let's get to the basic understanding. What is a fiscal policy? The first thing we're going to understand is the very basic understanding, and that is what is fiscal policy. What is fiscal policy? So just do a check for your mind. So do a check and ask yourself, what do you know about fiscal policy? What do you think fiscal policy is? So if we just tap in your head or your mind and try to just predict what fiscal policy is, you might get an idea about government expenditure. You might get words like taxation. You might get words like revenues. So yes, all those words are used under fiscal policy. Let's get to the theoretical definition, the correct definition, what really fiscal policy means. Fiscal policy is basically regarding the balance. Balance means balance between two things, right? So it is about the balance between, so it is more about the balance, between two things. So we are trying to play within two things. So the government is trying to play within two things. Number one is said to be revenue side of the government, which we call tax revenue. Number one is said to be tax revenue. So if someone asks you that the government has increased taxes, so are taxes part of fiscal policy? Yes, just right now I've written it. Number one, the first component of fiscal policy is taxation. So you would, click it that fiscal policy is being changed if government is changing tax rates. Either they're increasing the tax rates, either they are decreasing the tax rates. That means that something is changing in the fiscal policy, right? The second component is the government expenditure. Why? I mean, just ask yourself, why would the government collecting taxes from you? They won't be collecting taxes for you to just save it in the savings account. Obviously, they want to make some expenditure, right? So they want to make an expenditure which is called government expenditure. Government expenditure. So you have two things right now. These are the two main components of a fiscal policy. What? Number one, tax revenue, and number two, government expenditures. So the government is trying to play within these two policies. At times they might be equal. At times one thing would be up, one thing would be down. At times the other thing would be up, the next thing would be down. Let's ये up down हम थोड़ा whiteboard पे भी समझते हैं. So let's understand that. So there could be different type of fiscal policies. I'll just name some terms that you go through on the TV talk shows, or while sitting in a sitting with your friends. You go through these terms as well. So let's understand these terms. So we use the word of budget. What is a budget? So you have heard the word of fiscal budget. What do we mean by fiscal budget? You often hear that word. just lately, just recently, I guess a week back, government announced its fiscal budget, right? So, what do we mean by fiscal? First, let's get to this point. What do we mean by fiscal? What do we mean by fiscal? What is fiscal? If someone asks you, what do we mean by the word fiscal? You must have heard the word fiscal calendar. So, in that regard, what do we mean by fiscal? So basically, fiscal came to be a collection period. It's a collection period of the government, tax collection period of the government. That's why you must have heard fiscal 2018 means a tax collection period of 2018 where the government takes tax collections. So fiscal is the period, tax collection period, and it's about fiscal policy. That means how the government are collecting taxes, number one, tax revenue, and how are they using that to make expenditures. So number two, government expenditures. We make a budget out of it, like the government makes a budget out of it, how much income we're going to collect and how much expenditure we are going to make. So they make a budget in advance they make a budget. Like let's suppose if they want to make an expenditure in the 2020, so their budget will be announced today. So our Pakistani fiscal period starts from June, sorry, for 1st July to 30th June. So if like let's suppose 21 fiscal period would be starting from 1st July 20, ending on 31st June 21. That's called fiscal budget, in which the government is setting up how much revenue to collect, how much taxation to collect, how much tax amounts to collect, and how shall we make expenditures, in what areas, in what projects. So that's called a fiscal budget. So there could be three scenarios in fiscal budget. How many scenarios? Three scenarios in fiscal budget. Number one scenario could be that the tax revenue that has been budgeted to be collected equates or equal to the government expenditure that has been planned to be made. So tax collection, like let's suppose 10 billion rupees has been is planned to be collected from the people of Pakistan, and 10 billion rupees is also planned to be made in expenditure. So that means both are balanced. That's called a balanced budget. That's called a balanced budget, which rarely happens especially in third world countries. It's very hard that your tax revenue will be equal to government expenditure. It's very difficult, and most of the countries do not keep that scenario. It's very very rare that government will keep a balanced budget kind of a scenario. So this is called a balanced budget. This number two category now. Think of it. Obviously, one thing can be greater, the other thing can be lesser. So number two scenario could be that the tax revenue that is being collected is greater than the government expenditure. So the tax revenue, obviously, it could be like, let's say, developed countries, people are ready to pay taxes. They are very unlike Pakistanis, right? So Pakistanis are very special kind of a generation which wants to save taxes at any cost or evade taxes at any cost. But there are scenarios at times where tax revenue can go up and government expenditure can go down. We're going to discuss that. How does that happen? How can we increase tax revenue? How can we decrease? We're going to discuss that later on. So if that is the scenario, in which case if tax revenue is greater, government expenditure that is being made is lesser, you can see the gap. This is called a surplus. So government can save some money into banks or in foreign reserves. So this budget is called a surplus budget. So this is we also call this budget surplus or fiscal surplus. All these words are used. So this is a budget surplus, which is a good thing. Good thing in the sense, not a good thing. It can happen in any scenario. We're going to discuss that later on to make you understand more about how does these budgets income, right? So now what could be the third scenario? Third scenario could be the opposite. Third scenario could be that total revenue that has been collected by the government is less than the government expenditure, meaning the expenditure that the governments are doing or making is greater than the tax collection that is being collected. So in that case, what shall we call this now? This would be called a deficit. You're going through a deficit. Why? Because expenditures are high, revenues are low. So this is a negative gap that is being generated. That is called a deficit. So we're going to say this a budget deficit. So there are three terms up till now we have understood: balanced budget or budget balance, budget surplus, budget deficit. So if I use another words, we also call this fiscal surplus. Budget surplus is also called fiscal surplus. Budget deficit is also called fiscal deficit, right? So these are the three terms that we have discussed up till now. Now let's understand the objectives of fiscal policy. We have gone through the three key terms regarding which is called, one of them is called budget surplus, one is called balanced budget, one is called budget deficit. Now, as we move on, going into detail of fiscal policy, let's discuss the objectives. Why are we studying this fiscal policy, and what do we meet? What goals do we need to meet through these fiscal policy? Or we can say through changes in the fiscal policy, what goals are we planning to meet up? So let's discuss the objectives of fiscal policy. Objectives of fiscal policy. Fiscal policy. Let's think about it. What usually government tries to do with, or what objectives do you feel that government tries to apply through fiscal policy? Obviously, number one is to change the level of activity in the economy. They want to bring a change in the activity, in the level of activity in the economy. So number one is to change or to influence level of activity in the economy. Activity in the economy. So number one is that. So they want to influence the level of activity. Activity means how much people are purchasing, how much things are being sold, so how much is being produced. So they want to, influence the level of activity. Could be either to increase the level of activity or to decrease. How do they do that? By affecting the aggregate demand curve. So by affecting the aggregate demand curve. What's an aggregate demand curve? The total demand power of an economy. So aggregate demand curve can also be said as a total demand power of an economy. So basically they're going to influence the total demand power of an economy, and through that we're going to influence the level of activity in the economy, right? So this is the first objective, number one objective. Let's have a slight discussion just to come up with an example. And let's suppose if they want to create higher activity in the economy, they can apply this budget deficit policy, decrease tax revenue, because as taxes go down, people will be left with higher incomes, hence the demand for goods will increase. As demand for goods will increase, activity in the level of activity in the economy will also start to increase. There will be more sales, hence for more sales there will be more production. So just giving you an example that how can they affect the level of activity. Obviously we're going to study that in detail further. What could be other objectives for fiscal policy? What do you feel that what could be the other objectives of fiscal policy? You must have heard the word wealth equality, good distribution or equal distribution of wealth, right? So This is the second big objective of fiscal policy, that is redistribution of wealth. Second, we can say, so the second is redistributing wealth and income among segments of population. So distributing wealth and income among segments of the population. Let's go through an example of it. Let's suppose this guy is a poor or rich guy, so I'll make a smile over it. So a rich guy is happy, right? Not necessarily. Usually poor are happy more than the rich guy. However, the rich guy is here, the happy face, and there's a poor guy with a sad face, right? So this we can say a poor guy. Why is this being said? Why one is being said rich guy, one is saying poor guy? Because of their incomes. One person, this rich guy has an income of, dollars 40,000 annually. Whereas the poor guy has an income of dollars 4,000 annually, right? So one is a poor guy, one is a rich guy. So now, how can we, redistribute the wealth? The government wants this portion of wealth that is being earned by the rich can be used by the poor. That's called redistribution of wealth. Now the government can do a simple tactic. It can apply a heavy tax on the rich guy. Like let's suppose it is applying a tax of equivalent to $15,000. So it is applying a heavy tax amount on the rich guy. So it's taking $15,000 amount from that 40,000 baht. Whereas it can charge a very lesser tax on the poor guy. So it might charge just 500 or might do exempt it because that's a very low income. So it might exempt it from taxation. So however, it can use this 15,000 on the welfare of the poor guy. Like let's suppose provide the poor guy with free health facilities, provide the poor guy with some of the free groceries. Like if a child is born of the poor guy, he might get free nutrition in the early stage of its life. So all that is the redistribution of wealth, right? Or the government can provide it unemployment benefits. The government can provide it welfare benefits in cash form. So what it is doing, the government is redistributing from the rich and spending it on the poor. That's why taxation systems are really important for redistribution of wealth, right? So that's what we mean by redistributing the wealth. Third, there's another objective. One more objective that a fiscal policy can use. And what would be that? What could be that objective? That is allocation of resources. Allocating resources among economic agents. Or sectors in the economy. Sectors would be a better word. Sectors in the economy. Now, sir, what do we mean? What do you mean by this? It's really important and it's a very practical case, and I can easily relate that with the current government measures that it took in the last year. So the third point, let me explain that third point. So giving you a very realistic example, like let's suppose we know in Pakistan, or I guess in Pakistan only, we have a very big, huge energy crisis, power crisis in the sense we do not get proper or sufficient electricity, 24 hours a day. We are not able to generate that much. So that means higher consumption of electricity is always discouraged by the government or by the provider of electricity. So they're always discouraging to consume lots of electricity. That's why we have inverter ACs, we have inverter fridges. That's why we keep the AC on 26. So we have that crisis. Now, government can, through taxation policies, can try to allocate resources you know, rather on developing those alternatives which could help fulfill this gap, such as solar energy or solar electric, or we can say solar energy. So you must have known that solar energy has tax incentives rather than having uh, tax costs. They have tax incentives. They get subsidies at times. Why? Because the government wants this sector to go up, and people can use more and more solar energy around them, so that the load on the power consumption can go down with the help of the solar energy. The government can use taxation to help some sector to grow. I have another example as well for you. That is, lately last year the government was trying to shift resources from the real estate to towards industries. What happened lately in Pakistan since last 7 years, there has been so much investment in the real estate sector. Like, let's suppose for the last 10 years, people might have invested some amount of money in plots which are empty. No work is being, residential plots, barrier town, highway. People have, or DHA phase 9, people have made massive investments on real estate. Now, real estate, problem with the real estate is that it does not give you productivity immediately. It takes time. 20 years, 25. If you have invested, you know, plots very, far away from the city, they might take 25 years to develop. So it's a plain land. No productivity is being made over it. Your money is stuck on a plain land, plain land only. No labor is being worked over there. No factory installed over there. It's a plain land. So what the government tried to do in the last year, which eventually did not, it helped a bit, but not much. They increased taxes on the real estate. You must have heard that if someone sells or buy real estate within 3 years, there were massive taxation on that. Hence, to discourage real estate investors to pull in more money in the real estate. They did not want it more money to go into real estate. Instead, they wanted money to shift, and instead of people investing in properties or in plots, they start investing into businesses. They start investing into industries. They start investing into stock markets, so that money could be used over there, because that can be productive. Like, if you install a factory, you are hiring a higher number of labor. You're making products over there, so incomes are going up. So your industrial sector is far more productive in terms of GDP than your real estate sector. So through taxation policies, government can allocate resources from one sector to another sector. So hence we have studied three objectives of fiscal policy. Number one, the first objective was what? If we recall the first objective was your increasing or influencing the level of activity in the economy through the aggregate demand. Number two was the redistribution of wealth, so that poor doesn't get poorer and rich doesn't get richer. People can use the money of rich and it can be spent on the poor. Third was allocating resources among the, like, let's suppose if I want to invest in international security, tax might be very high on me. So that means the government is discouraging to me to invest over there. Like, let's suppose cigarettes, taxes are very high on cigarettes. Why? Because the governments are discouraging me to invest or to spend my resources on cigarettes, rather than I can spend my resources on some other goods, so that they can also be promoted. So these are the three main objectives. So whenever the government is applying a fiscal policy, they have these three main objectives in their mind. So now I'll be stopping my video and I'll be, going through the, now you don't need to see me now speaking up. You can hear me as well. So I'll be now, you know, going through your screen sharing. So now moving forward to see and understand better the two components of fiscal policy. So I'm going to discuss the first component as government expenditure first. So as we discuss that the government can increase their expenditure or they can also decrease their expenditure is a part of a fiscal policy also. So how could they do that? I mean, if they want to increase the government expenditure, how can they increase it? If they want to decrease the government expenditure, through what sources can they decrease that? Which we basically call spending tools. We call that as spending tools. So where government usually makes expenditure, number one, very strong expenditure are called transfer payments. Are called transfer payments. So what do we mean by transfer payments? These are basically payments in which in against, or we can say in which against there is no consideration is being charged. So transfer payments are those payments in which we can say in exchange of which no consideration are being charged, such as we can say these are also known as entitlement programs, also known as entitlement programs, such as, like, let's suppose you must have heard something like unemployment benefits. So in countries, the government pays unemployment benefits to their citizens. So obviously government is making an expenditure on that. So that comes under transfer payment because government in exchange is not asking for any consideration. It is giving free of cost, without any work in exchange, without any, in any of consideration in exchange. They're just paying them what? Unemployment benefits. Such as example also include in the developed countries, you must have heard the words of social security. This is overall security that is being provided by the government, which includes also health benefits. That's also the expenditure that the government is providing to its citizens. So all these are coming into the transfer payments component, such as insurance provided by the government to its citizens, if they are paying pensions through government plan to its old citizens, all that comes into transfer payments. Because as I said, transfer payments is a thing that is being paid to the person without any consideration in exchange. So dollars 100 is just being paid to a person, but no consideration is being charged in against. That is the reason why transfer payments are not added up in the GDP of the country, right? However, so we can understand that that's one way the government can change their expenditure. Number two part is called the current spending. Number two is called the current spending. So one is called transfer payments. Number two is called current spending, which refers to the which refers to government purchases. This refers to government purchases of goods and services of goods and services on an ongoing and routine basis. So current spending means the current that already the government is spending, such as, if delegates are coming from different countries, they might be making some expenditure on that. They might be making some routine expenditures on the roads, on the infrastructure. So they can either cut that down or increase that. That will also be part of your government expenditure, which is already being expended. Third is called capital spending. You must have got a hint by the word capital. Capital spending simply means the spending on infrastructure. Spending on infrastructure such as flyovers, structures. Must have heard flyovers such as schools, hospitals. So these are said to be capital spending, and this spending it has the highest impact on the economic activity. Has the highest impact on the others also do have an impact on the economic activity, but capital spending is said to be having the highest impact of on the economic activity. So infrastructure includes roads, schools, hospitals, technology. That all comes under the infrastructure. Now comes a very basic question in my mind. Is it good that the government needs to make expenditures on schools, on roads, on different businesses, or is it better that government hands over all these expenditure to the private section of the economy? They make all the schools, they themselves operate all the hospitals. So let's do some justification of government spending. Why government spending can have a better impact? Justifications on government spending. Let's understand that. So justification means that I'm just going through, or I'm supporting the idea that why the government having an expenditure in the economy has good benefits. Number one, it because government is expanding in the economy, hence it can provide some unique services which a private firm may not, such as national defense. The concept of army would not be there if government will if government is not making expenditure on that section. There would be no concept of army, there would be no concept of intelligence agency, there would be no concept of national defense, there would be no concept of policing, no concept of rangers. So obviously it is coming because the government is spending the money. If the private firm would have been spending, there would have been no army. They might not have been spending on policing. Why? Because these are not profitable institutions. A private person will only invest in such opportunities which are profitable. Why would a private person would invest in a park? It's not profitable. Why would anyone invest in a police? It's not profitable. Do I go and pay for my FIR to the police? Do I go and pay monthly salaries to the police? No, I don't do that. That is being done through government expenditure, through my tax money, right? So because of the government expenditure, you can see such goods and services in a society. Otherwise no such services would have been available. Number two, it you see a better investment in infrastructure such as flyovers. If government may not have been making expenditure, I don't think any private firm will make underpasses, will make flyovers. A private firm is only defined to its business. It's limited to its business. They don't want to go and try to make roads. Like let's take an example. There are numerous factories in Korangi side. Have they ever invested on the roads outside on the Korangi side? Never. Because that they are not interested in doing so. That's where government can play a part. They make expenditure, hence our infrastructure can get better. And because as infrastructure better, it can enhance growth in an economy. It can further enhance growth in an economy. Three, as I said, because it's enhancing growth in the economy, so we can say it is supporting growth. Through government expenditure, government is supporting growth in an economy by which they are able to reduce unemployment, in which they are able to reduce unemployment. So again, private firms may not have the target to reduce unemployment. No one opens a business with the thinking that I have to reduce unemployment in a country. Everyone opens a business with the intention of making profits. But government can, through properly aligning its government expenditure with the target to reduce unemployment and to support growth, they can have a good impact on the economy. Further, with the investment being made, or we can say with the government expenditure, if government expenditure is being made, it can help and provide a minimum to provide a minimum living standard to its citizens, living, or we can say minimum standard of living to its citizens, minimum standard of living to its citizens. So because the government is trying to, tax some people, they are making expenditures, they're making expenditure on schools. This way they can help maintain a minimum living of standard. Let's suppose, if we take an example of some areas in Pakistan where government may not be spending with good amount of money, people do not have proper drinking water, people do not have, proper nutritions over there in such areas. Why? Because government is lacking to, spend money over there. So you can just see that there are areas, because government is not spending money, is going down in living of standard. So that means in that case, no private organization can help him. Private organization has least bother about areas where people are not having their living standard. As I said, private firm is only working for its profits. So that's where government expenditure is very necessary in the economy, so that people can have a minimum living of standard to sustain as well. And lastly, it's also very important, it government expenditure through subsidies can enhance research and expenditures, can enhance research and development activities. Research, which is called R&D, basically R&D is that component where we plan, we try to enhance technology, we try to bring up new products. So if the government is not facilitating R&D expenditures, obviously in the next 10 years, such countries will stay behind than the countries which are spending on their research and development, because they might boost their technology, their productivity. But obviously this research and development comes with a cost. You have to input a cost on it. And as I said, private person would be very reluctant to put a huge cost on it, because its profits may not be capable of doing that. Hence comes the government expenditures, subsidies, which can literally, push the private investor as well to look into research and development. So these are the justifications that why government expenditure is necessary. So if I make a country as a circle, so this is a country, no government expenditure is being done over here. Would you see police stations over here? No. Would you see parks over here? No. Would you see infrastructure improvement over here? No. Would you see a good army over here? No. Would you see, people not exploiting the poor? No, the poor will get poor and the living of standard will start to fall down. Would you see greater research and development? No. So as you can see, government expenditure helps so much into an economy. So that's why we believe that there are good justification for government to spend money and to make expenditures in the economy so that the country can boost, country can learn, country can be safe throughout. That's why it is necessary for the country to have, you know, or to have the ability to apply government expenditures. So government expenditure is very vital. It plays a very vital role to the economic growth of a country. So it plays a vital role to the economic growth of a country. So I'm giving you 5 minutes. I want you to make some notes on these points, on the circle I've just made, or an example that you can write, so it stays in your mind and you can have you will be able to retain it well. So giving you 5 minutes. Do that. Now, as we have understood the tools of how to increase, of where the government can increase government expenditures, what are the spending tools, and we have also discussed some justifications that why government expenditures are necessary. Now, let's understand some revenue tools now, that how government can increase tax revenues and how. So let's understand the revenue tools, or we can say tax collection tools of the government. There are two types of taxes. One is said to be direct taxes. One is said to be direct taxes, which are directly involved with your income or wealth. So we can say these are linked with your income, with your income and wealth, and wealth. So the taxes that are being charged on your incomes or wealth is said to be direct taxes, such as one, we can say, it's called income taxes, which are, if you're working somewhere, tax is being charged on your salaries, on your other incomes that you're earning. So you have to pay certain amount of tax to the government. That's called income taxes. Could be wealth taxes as well. In some countries, even in some wealth of Pakistan also, but usually wealth taxes are not so common in Pakistan. But in other countries, if your wealth is being increased, you are being taxed a certain amount of that profit also. Third, estate taxes. Estate taxes such as property taxes, corporate taxes, which are charged on the corporate profits. These are said to be corporate taxes. Capital gain tax. Capital gain tax, the government is charging to the capital gains, such as, let's take an example of your stock. You bought a stock for $40, you sold it for $50. So you had a capital gain on it. This capital gain is of $10. The government will charge a tax on that capital gain as well. That's only charged if you sold it or if you sell it, right? So these are said to be direct taxation. This is said to be that the government is charging direct taxation. We all the government that is applying direct taxes, such a system is also said to be a progressive taxation system. A progressive taxation system. We'll understand why do we call such a taxation system progressive. The reason why, because in such a direct taxation system, the government can apply a mechanism that the person who have higher incomes pay higher taxes, and the person who have lower incomes pay low percentage of taxes, right? So person with higher incomes have to pay higher percentage of taxes. Someone who is earning 10 lakhs might have to pay a higher amount of taxes, and someone who is earning 1 lakh might have to pay a lower amount of taxes. So that justice, or that justice of taxes on the basis of incomes is said to be a progressive taxation system, which helps in improving the distribution of wealth, because you're taxing the richer high, whereas you're taxing the poorer lesser. Then hence you're giving a chance for poor to become richer and richer to become slightly poor. So you're helping in the taxation system. So you can see that under direct taxation, government has so many ways of increasing its revenues. The numbers two type of taxation system is said to be indirect taxation system, which is very famous and very popular in Pakistan. Indirect taxation. What do we mean by indirect taxation? Means which are levied or which are linked to our consumption of goods and services, linked to goods and services, such as GST, such as VAT. These are taxes that are being charged on the good. Like let's suppose if I buy a biscuit, there must be a GST charge over there. Let's suppose if I go and eat something from the restaurant, I have to pay 17% GST. That's an indirect taxation. That is not being charged on my income. That is not being charged on my corporate incomes or my capital gain tax. It is being charged on my consumption. Such is called indirect taxation system. Indirect taxation, which includes sales tax, it includes value added taxes, it includes excise taxes, pardon me, such as you pay on your cars, on motor vehicles. So that's called indirect taxation. Indirect taxation can also help in reducing the consumption of goods. That's why we there is a higher amount of indirect taxation on cigarettes and on different things, right? So that's how indirect taxation is applied. And a system which is heavily reliant on, or a country which is heavily reliant on indirect taxation, we call that taxation system as regressive taxation system. By regressive, let's take an example of petrol tax. Petrol tax is, let's suppose, on an expenditure of 100, a dollars 10 tax is charged, or a rupees 10 tax is charged. So a person whose income is 20 lakhs also, if he consume 100 rupees petrol, he is also paying how much tax? Dollars 10. Now if I compare his income and the amount of tax he is paying, this would be a very low percentage of tax. And on the contrary, someone who earns just 50,000, if he consumes $100 of petrol, he will also pay how much tax? Dollars 10. Now for that person, this percentage of tax would be far greater than the person who earns how much? 20 lakhs. That means tax is not being proportionately charged. It is being, much a greater burden on the poor. The poor will become poorer because his income is being eaten up in the percentage form. That's why we call that regressive system. And regressive system can literally worsen your distribution of wealth. It can, have an adverse impact on the distribution of wealth. So it's necessary to understand that it can have a very greater impact on it. Now let's discuss something, or we can say, let's discuss about the desirable attributes of tax policy. What are the desirable attributes? What, how tax policy should be? What are the desirable attributes of tax policy? Of tax policy. So let's understand the desirable attributes of it. So how should be a tax policy? Firstly, it should be very simple, meaning simplicity should be there. It should not be very complicated, because a complicated tax policy would be very difficult to enforce. So should be simple and very understandable as well for calculation purpose. So we can use the term simplicity to use and enforce. So it's easy to use and enforce also. It does not complicate or create further problems in the system. It should be very fair. As I said, fair in the sense it should not put a great burden on the poor. So it should try to have an equal or higher burden, rather than higher burden on rich, and lower burden on poor. That's why you must have heard When the government was, generated taxes on the electricity bills, they were not generated for people who consume less than 300 units. Why? Because those are poor people. So they wanted not to charge lots of taxes on the poor people rather than charge taxes on the richer people, right? So that's something about the fairness, or it says to be that it should be a good or a desirable attribute of a tax policy. A tax policy should be as such that it can be, the collection of tax shall be sufficient to make important expenditures of government, or the, we can say, important expenditures, or the one that are in need, the expenditure that cannot be cancelled, important expenditures by the government. Otherwise, what happens if tax collection is low, then the government might not be able to spend good amount of money in education, in healthcare, in security, in infrastructure. So that's are said to be desirable attributes of a tax policy. So we can say that such a tax policy would have a good impact on the economy. We can say that, right? So now we have done the two components of fiscal policy, and we have understood that how can we increase the two components. One was tax revenue and the other one was government expenditure. So we have got an understanding that how can we increase tax revenue, how can we decrease, how can we increase government expenditure, how can we decrease the government expenditure. So let's have a slight discussion, quick discussion. The government wants to increase tax revenue. How it can do? Number one, increase the tax rates on the salaries. Number two, increase the transfer payments, pay higher unemployment benefits, pay higher welfare benefits, pay higher pension plans. It can increase indirect taxation. It can increase taxation on goods and services. It can increase its GST. It can increase, value added taxes. It can increase duties. It can increase tariffs. So that's how government can increase its tax revenues. Through indirect taxation, also through, it can increase corporate taxes, higher taxes on business profits. Just to give you an idea, do you know how much tax usually countries charge from your income? We are very lucky that we are not charged that much a tax in terms of direct taxation. Yes, in terms of indirect taxation, we are charged a lot. But in terms of direct taxation, as I was in the UK, over there, if you're earning above £40,000 per year, you will be charged a tax of 45%. Just imagine that you're earning 145 rupees is going into taxes. 45% tax would be charged. And I still remember the citizens over there used to cry, oh my God, how huge amounts of tax is being paid. But because of higher amounts of tax, their healthcare is free. They have so many good benefits for their public. Their educations, their schools, their hospitals are very good, and all of them are under the government control. They are not privatized, they are under the government control. So see, we in Pakistan do not have that tax culture. If someone even demands a 10% tax on an income, we go like bamboos, like what? 10%? We are puzzled. 10% tax, that high much tax? I cannot pay that high tax. Sorry, I'm going to evade the tax. Now, what will happen? Because you're evading the tax and not paying that tax to the government directly, the government is having a shortfall, and in order to, you know, take taxes from your pocket, they will have to increase indirect taxation. And in the indirect taxation system, the poor will be the one with the highest burden, right? So these are some tools that you can increase taxes. How can you increase or decrease government expenditure? So let's take an example of increasing the government expenditure. One, it can increase its transfer payments. I guess I mixed that up with the tax revenue. I think so, while explaining the tax revenue. So pardon me if I mixed it up. So it can increase its transfer payments. It can increase the expenditure on infrastructure. It can increase the expenditure through making parks, making infrastructure, and all of that, right? So these are different ways of increasing tax revenue or increasing government expenditure. Now I'm giving you 4 minutes, just 4 minutes, and I want you to write how government can decrease tax revenue with pointing out each tool that we have studied. That how government can either decrease, tax rates, they can decrease, you know, corporate taxes, capital gain taxes, GST. So just write down those points and then write down point for decreasing the government expenditure. They can decrease transfer payments, they can decrease current spending, they can increase the capital spending. And then I want, so go both these sides with examples. So you can relate the lecture as well. So giving you 4 minutes for that. So I hope you must have written something. Let's have a slight discussion that what are the advantages of, you know taxation or increasing taxation. One advantage is that if government wants to discourage you from some goods such as tobacco, such as alcohol, we can increase taxes on it and it can discourage that the consumption of such goods. With that, through indirect taxation, government gets a very fast access to taxes. They can make very fast revenue to make certain expenditures. But with that come disadvantages as well, because obviously it affects the consumption of the individual, hence affecting the aggregate demand, and can also come and it can also lead towards the decrease in the economic activity also if proper taxation is not applied. Now we're gonna go through that how taxes increase in the taxes, or the announcement that taxes are being increased or decreased, how does that brings a change in the level of activity in the economy. So let's understand that.